Hi, everybody. This is Hyperwave. Yes, I'm in a library. We're about to show this one. It's also a fat flash. I can't even talk. Flash flood outside. So it's quite an interesting day or a good day to read. We're going to cover Bitcoin specifically today and then this morning. And then we're actually going to come back to you at market close at 4 p.m. and talk traditional markets and some other stuff. I'm going to pass it over to you, Ty, and then I am going to quickly be a nerd because people always ask, at least Tyler, you guys stopped asking me. It kind of makes me sad. What our favorite books are and books that we recommend for TA and in general. But as you guys know, we don't just stick with TA. So we are going to show you some of them. So anyways, I'll switch to you, Ty. I'm sorry that I didn't put Ray Kurzweil here, but I'm pretty sure you're the one that has that book.
Yeah, I got a bunch of those. Hi, everybody. We are going to do two vlogs today. This one is we're going to try to keep them both to about 30 minutes. But this one is going to be on just something I've been thinking more and more about, and I'll explain why in just a second. But it has to do with zones and fields, and I'll explain what I mean by that. In technical analysis, but particularly with Bitcoin, there's something strange about Bitcoin as an asset class that tends to magnify the effects of these things, and I'll explain what I mean. We're going to just look at one chart today, a Bitcoin chart, and I've got three different zones drawn on it, and I've talked about all three of them over the last year. But I just kind of want to summarize what it means to me and how it might be helpful to you. But first, I'm going to let Leah go through some of these books that both of us really like. We'll explain the Jack Welch one a little bit more because in our webinar this weekend, we're going to spend a lot of time on GE, General Electric. It's actually gone through two hyperwaves, one 90 years ago, long before Jack Welch, and one basically after Jack Welch turned the reins over to someone else. And someone pointed out in Twitter that I had made an error saying that the current GE hyperwave had completed, which clearly is not true. The original one did. In fact, the original one 90 years ago was the perfect hyperwave. It's the archetypical hyperwave. Both Socrates and I gone through all kinds of hyperwaves to find the one that's the closest to the archetype. And GE 90 years ago happens to be that one. The one that we are currently in is not. It is the most bizarre hyperwave I've ever seen. And we'll explain more about that, not today, but over the weekend in our Hyperwave webinar. But for now, Leah, why don't you just quickly show people which books you've picked out among the many that you and I both have and love.
All right, this is going to be quick, guys, and we'll talk about it on another vlog. You can screenshot. We'll put a list out later. Just being a super nerd, my dad counted, and he's making me donate all of them. Apparently, I have 3,000 books right now, so it was actually kind of hard trying to find these. And I will lastly say I just finished Neil Gaiman's Neverwhere because I love sci-fi, and so if anyone reads Neil Gaiman, that's actually a really good one. But okay, really quickly. So let's try to get just the picture, and Thor's beneath us. Okay, some important ones. Let me see if I can read these. The Physics of Wall Street. We have Black Swan. Gerda Lesher-Bach is going to be an interesting one that we talk about another time. Animal Spirits Schiller. Here's Kyler's favorite, if I could try to think that that's true, which is, Edwards and McGee, TA of Stock Trends. Alchemy of Finance, Soros. Irrational Exuberance, again, Schiller. Sorry, I know I have a reverb, but this is hard to do because some are upside down. Guide to Mutual Funds, and then actually the Encyclopedia of Technical Market Indicators. Okay, let me try really quickly. Okay, Winning, Jack Welch. That's what Tyler was talking about. Tyler's gonna laugh at me, but what did I throw in? My favorite. I'm obsessed with Sherlock Holmes for Arthur Conan Doyle, but there's a reason that I put that in, that hopefully one day and probably pretty soon, that I think it's related to finance. Misbehavior of markets is actually my favorite. I'm obsessed with Mandelbrot and Tyler and Tone, actually. I don't know if you remember Tyler. You probably do because you remember everything. But he actually has a lot of background in studying Mandelbrot. Okay, liquidation. That's an interesting one. It's an ethnography study. Anyways, intelligent investor. Obviously, that's Graham. The futures game. That'll even get you into poker. I will stop. Let's go.
Okay, very good. I'm going to do a quick screen share. And what we're looking at is Bitcoin, and I've got a bunch of parallel lines drawn on it. And I want to show you why. I'm going to start with the oldest one, which are the two at the top, which run parallel at 10,100 and 11,100. And back when all of this was going on, we're looking at a weekly chart. But back in early 2018, when the hyperwave of Bitcoin broke down, it became fairly evident early that something was going on in the form of support and resistance, going back to this area as we were going up. And there was no real evidence in the middle of this, but it turned out later that there was another area down here at about 10,100. So you're looking at two lines, one's 11,100 and one's 10,100. Now, if I break this down to a daily chart, just so we can get a little more detail, and then bring it back up to where we were at the top, and now expand it again. Early on, back in February and March, Leah and I started calling this zone the Valley of Death from the Tennyson poem. And the reason was because I concluded that as long as we stayed above that 11,100, off of this initial drop over here, which took us all the way down to the 11,000 area. In fact, on that particular candle, we dropped down to 11,159. 11,159. That was that wick spike bottom that fooled so many people, because then it reversed and closed at 14,000 approximately. Then we ran all the way up, as most of you remember, to close to 17,000 before coming back down to this area. This area started back with this wick. And there was really nothing over on this side of the chart other than a very large green candle that took off from these unbelievably odd two daily candles here. This little consolidation was basically at the bottom of this range that was going to develop months later. And the top of this green candle was very close to the top of this range that would develop later. But other than that, there was no real clue that this sort of thing would develop. Now, let me just talk a little bit about what you're looking at. Everybody knows, or most people know, or anyone that's listened to us or Tone or a number of the other technical analysts know that horizontal trend lines tend to be very, very powerful trend lines. but we have talked before about the fact that there is no line here. You can draw a line, but there is no line. What it really is it's a series of points that begin to accumulate in a certain area by which you can draw a line between those points. But once you've drawn a horizontal line, what you need to understand is it isn't really a line. A line has no depth to it. It's a series of points, and a series of points are infinitesimally small. So if we drew this line thinner and thinner and thinner and thinner, it would finally disappear. What it really is around a line is there's a field, almost like in physics, that extends above the center of the line and below the center of the line, and it dissipates as you move away from the center of the line in both directions. But something very odd happens every once in a while, and you get two parallel lines in which between the two of those lines becomes a very powerful field, almost like a magnetic field, in which when you're above it, you're drawn down to it, and when you're below it, you're drawn up to it. But as you try to get through it, there's a force that begins to repel you at the other side of the field. Now, I don't want to get too archaic here or too ethereal, but this is an important concept in general when using trend lines, because trend lines can be angular trend lines that go up or down, and they can give you a lot of clues about what everybody else is thinking. But when you get two of them together in these parallel fashions, and they are horizontal, they become unbelievably powerful. Now, what happened on this daily chart is when we finally whipped down below it here and whipped down below it here, right through what was going to become a new line down here, we bounced all the way back up. And off of this original one, we ran all the way back up to what I call a phase 6 of a hyperwave, this being the phase 5 down, the phase 6 back up, and everything since then is a phase 7 down. But what I want you to see is the detail that occurs as you get into this parallel region. Here we have 1, 2, 3, 4, 5, 6, 7, 8 days, basically in a row, in which we entered that field and got shot back up to the upside. Then we finally broke down through it on these 3 days, tried to get back up on each of the 3 and couldn't do it, and fell all the way down to new lows in this particular bear market. There were more to come, but this is important because these lows begin to define a new set of parallel channels that we're going to end up down here that we'll take a look at in just a minute. The bounce off of these lower horizontal lines brought us back up 2 days in a row trying to get through it, didn't do it, and then blew through it, but couldn't get through the top. 1, 2, 3, 4, 5 days. We had one big wick above it, closed right down on it, and then gave it up again. Not to be denied, for 5 days, we built up some steam and then blew back into it, ran up to the top of it. For 4 days, tried to maintain price above it and couldn't do it, and it all fell away. We came back and tested it and then fell away again. and went down to lower closing lows on this one. Now, I'm particularly interested in this because so many Bitcoiners and crypto people were so certain that off this double bottom, that was the end of the bear market, and that this run up was going to keep going up and keep going up, and maybe even get to new all-time highs. Both Tone and I resisted this move up, saying that we didn't think it was going to get back above 10,000. I said it, and I used the number 10,100 because that was the bottom line. I thought that it would run out of gas. It did. It didn't even wick above that point before dropping back. And then we started this amazing series of double lines, double horizontal lines with a very powerful field that was generated. If we go all the way over to the left of the chart, I'm sticking with the daily for now. We'll take it up to the weekly as we conclude this. But you can see where these were generated from. They were generated from this consolidation and this top, which then became the beginning of this field with these two candles. Now, it took many months after that. That was November. It wasn't until 3 months later in February that we tested that on this big spike low that a lot of people remember, where we actually dropped down to 59.20. Then we went back up into this upper area and came back down. And then on this, we had 1, 2, let's give it 3 or 4 wicks that tried to get into this lower zone and couldn't do it. Then we had to run up to the 10,000 area before it failed. Then we come back down. So let's just concentrate on the beginning of this range that goes somewhere in the 5,800 to somewhere in the 6,300. I didn't try to draw these lines perfectly, but anyone that's followed our vlogs know that I repeated all the way through April, May, June, July, August, September that these two lines were very, very important, and that we were going to break them according to hyperwave theory. But what I'm talking about right now has nothing to do with hyperwave theory. It's just this observation that I've made about Bitcoin specifically, and the use of these parallel channels that become fields that become almost opaque in between the two lines. They're so powerful. And you can clearly see it here as you drop, consolidate in the middle for a number of days, almost a week, try to get below it, sucked back up to the top of it, try to run it away from it, get sucked back down to the top of it, have this big run up to 8,500 that a lot of people were very excited about because of these huge green wicks. This 8,500 area is now very, very important to me. I said before we broke 6,000 that if we could get above 8,500, I could turn bullish on Bitcoin. My reasoning was that every time we came down into this zone, this parallel zone, and then were repelled back up to the upside, each one of these tops got lower and lower and lower and lower. And you know that as the triangle that Tone began drawing and everybody began talking about and looking at, half of everybody said, "You're crazy. We're bottoming and we're going to go to new highs." Some people said we're going to break down below that triangle, Tone particularly, and he had his own targets. I had my own reason for getting more and more negative, which was a phase 2 trend line that was coming in at this angle right at this point where it finally broke. But throughout all of that, I kept in mind these parallel lines, and just notice that every time we came back down into it, the bottom resisted and you got wicks, you got above it, tried to get above it, and it pulled it back down into it. Did it again and again and again until finally it all collapsed. Okay, now here's why I'm talking about this. I'm actually a little amazed at my own observation about these next two lines. I have no explanation fundamentally or technically why what I'm telling you today I find to be very important and I think needs a lot of work by other technicians and other people. But notice if I come over to the left of the chart, that before we really got off on this run above the 3,000 level, where we really started to accelerate into what was a phase 2 and a phase 3, and finally the ultimate top after a phase 4 in a hyperwave, that we had this long period of consolidation that described to a certain extent both of these lines long before we even ran up. Where here, I'm just, so we're all talking about the same thing. Price tried to get above, and 1, 2, 3, 4, 5 days in a row couldn't do it. Drop back to the bottom of it. Look at all the wicks. 1, 2, 3, 4, 5, 6, 7, 8 wicks in a row that tried to get below that red line. Well, what was that red line? It was nothing. There was nothing there. I've drawn these lines in months later, but then just taken it back to see, what was the progenitor of these lines. We looked at a couple of things on the previous two parallels, but this one really interests me. Then we try to break up above it, and look what happens when you get above it. Wick, 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 wick. Try again. Lower highs, 1, 2, 3, 4, 5 wicks, and finally a body below the top line. Then you drop and you finally get below those two lines. But then look what happens 3 days later, right back into it. Another wick into it, couldn't make it. 5 days in a row trying, back up to the top line. 1, 2, 3, 4, 5, 6, 7, 8 more days in a row before we finally take off. Okay, now let's come over to my call after the break below the 6,000 area into this new zone that we're now looking at. Okay, I've got to keep doing this and move that and go here and go here. Okay. Now look at this huge amount of space in terms of time. From October of 2017, for a full year, these lines had no power whatsoever. Mainly, I would suggest, because of these lines above it that kept all of the action, and these lines above it that kept all of the action below. These kept all the action above until we broke down through it. Now, I have been saying ever since these huge drops that took place in 1, 2, 3, 4, 5, 6, 7 days, basically 1 week, that because we cut through what a lot of people thought around the 4,800 to 5,000 area should be support, including myself. I had been predicting that if and when we break down below 6,000, we would find good support at 5,000. But the market doesn't do what you think it's going to do or what you want it to do. it does whatever the entire voting public in the form of investors and speculators vote for at the moment that it occurs. And when panic comes in, you can blow right through things like that 5,000 supposed support line. And there was reason to think 5,000 could be some support because of this peak over here, right at the 5,000 level. And Tone talked about that extensively as we were going up and going down. But this is what really interests me now. I'm beginning to feel, well, I'm not sure exactly how I feel about these lines, because I have been on the other side of the argument against 4 or 5 of who I consider to be some of the best technical analysts I've run into: Willie Wu and Ben Zen and Tone, and others that are looking for a move up to the 5,000 level, and some even 6,000 or higher. And I do not dismiss that. I think that's very possible. However, I keep saying, and I have said all the way from back here, that I thought the 4,000 to 4,200 area would hold prices beneath it. And I had no idea when I said that at what this would look like over the next 4 months. But just take a look at what happens when you get up to 4,200. 1, 2, 3, 4, 5 days, wicks above, and then gets rejected down to the bottom, and then finally collapses. Come back into it, 1, 2, 3, 4, 5, 6 days. One of those days got all the way up over 42 and then collapsed beneath it. 1, 2, 3, 4 days collapsed, stayed beneath it for a long time. And then this is where everybody started getting really excited. Once again, because these huge green spikes. And once again, this time we cut through the lower end. The first wick got close to 4,200. The second got up to 4,186 and then collapsed again. Now we've come back up to the lower end, and we've got 1, 2, 3, 4, 5, 6 days in a row. And I can't predict that we are now going to collapse again. All I'm saying is, I think I've just introduced a tool to all of you, particularly for Bitcoin. I've done this analysis with many other stocks and indexes and other things, but I've never seen quite the resilience or the power of these parallel fields that I am seeing in Bitcoin. Someday, hopefully, we'll understand a lot more about the volatility of this particular asset class for all the big macro reasons that we all talk about, having to do with debt and credit and possibly a new solution to the problem with this weird little thing that has been named Bitcoin. Has something to do with the size of the moves, but also something to do with the creation of things like hyperwaves, and why Consensio works so well on it. And now I'm introducing this concept of what I call fields or zones made up between parallel lines. And I've gone on longer than I wanted to, but I just thought it was very interesting, at least for me. And I hope everybody got something out of that. We will try to go into more detail once I know more about what this thing really is, because I don't. But in any case, I'm going back to my partner.
Well, you have 2 partners today, and which is that I threw Tone in right now, So since you ended by saying that we don't fully know what it means, usually this person named Tone has opinions as well about what things mean. Tone, can you have enough Wi-Fi? You there? Yeah, we'll get him.
Hey guys, hold on. I have to get a speaker. I wasn't as prepared for this as I thought I was.
And for everybody else listening, Tone just went live right before us. And
yeah, sorry about that, Tone. I didn't mean to step on your toes. We need to coordinate a little more.
Well, in the meantime, Ty, that was really, really interesting. All right. While Tone sets up, what's your favorite book? I already know.
Well, I love the technical analysis of stock prices only because it was my first introduction to technical analysis, and I just absorbed it completely. I loved what I saw. That was back in the early 1970s. Somebody told me about it. The book was published back in the late 1940s, but I had not been exposed to it. And it's very basic. It's a great way for people to start on technical analysis. Okay, do we have Tone?
We got Tone. So Tone, please give us, because sorry that we missed your show a little bit, summation of what you were saying. The title said optimism. So little summation, and then I'll have you in, if you don't mind. I know that you're repeating yourself back to back, but thank you. And then you and Tyler would love to hear if, Tyler, what you think based on what we just said too.
Yeah, no, I mean, I was watching what you guys are doing. Wow, you have like a stack of books there. Cool. Oh, and you're wearing the unconfiscatable shirt. Awesome. I missed I missed the first few moments of your stream, but basically, I do like this breakout. I mean, this is not the first time I've been trying to be optimistic at above 4,000. I mean, it's like my third go around now. As you guys know, I'm a big believer that the more times you hit support, the more likely you are to break it. And the more times you hit resistance, the more likely you are to break it. And we are now flirting with 4,000 for the third time since dropping to 3,000, which to me increases the probability of breaking it to the upside. I'm fairly consistent on this for the same reason I was very sure 6,000 would break down. I am getting more and more confident that 4,000 will break up. I mean, it's just a symmetric market. Now, we also have plenty of room to go up without endangering the bear trend. Even if we go up to 6,000 or 7,000, the bear trend is still intact. Just like Tyler said, the $8,500 zone is immensely critical. As of right now, I would need a move above 8,500 to admit that the bottom is in. And as long as 8,500 doesn't break, then I'm still expecting lower prices. Now, what I would love to see is establish a lower high on par with the clarity of the $8,500 high. If we could go up significantly above 4,000, and by significantly, I mean anywhere above 5 or 6 or even above 6 up to 7, and then a spectacular rejection, then that becomes the new element to become a bull for me anyway. I don't want it to be too high because now you're getting into, is it close enough to 8,500 or not? So the absolute perfect scenario is a move to the $5,000 to $6,000 range, a rejection there going sub 3,000. And now that gives us, a lot. Let's just say if that happens, it will make my 2020s a lot easier because then no matter what, I'm close enough to calling the low and I'm a lot sooner and a lot closer to the low to calling a new bull market. So that's really what I'm praying for at this point. And that's my outlook on it as a medium-term general idea of where price is headed.
That's great, and I certainly can't and don't disagree with anything you said, other than I think it'll be almost impossible to get above the 6,000 zone. I think it'll be highly improbable to get to the 5,000 zone for some of the reasons I just talked about. Let me just make one comment about what you said in terms of the number of times either support and or resistance are hit. One of the things that I've observed is where you have, if you are in a bear market, which we clearly are in Bitcoin, areas of resistance to the drop in price, I would agree with you that support areas like 10,000 that were able to bounce prices off it a couple of times before they gave away, then becomes areas of resistance. And it's areas of resistance in a bear market, which means that it becomes very difficult, no matter how many times you hit that from the underside, that you're going to break it. I disagree that if you hit it 2, 3, 4, 5, 6, 7 times, it's going to break. Not in a bear market. In a bear market, it will become stronger and stronger as resistance, and more and more people will start assuming that that's a place to take profit. Now, when we drop down to 6,000 in a bear market, which we did, 6,000 becomes support, but it's in a bear market. And what support in a bear market means is the number of times you hit it, it grows in terms of the probability it's going to break, which it finally did off of a number of things. My phase 2 line, Tone's triangle, the Consensio was still in full down mode. It had to break. Tone said it had to break. I said it had to break. Very few people did, and it broke. Okay, let's take us down to the 4,200 to 4,000 zone. We are still in a bear market. That means if 4,000 and 4,200 had held on the way down, it could have become support for a period of time. It didn't. We cut through it like butter, and now we're still in a bear market, but underneath that overhead resistance. And in that instance, that's why I keep saying I think it's going to be very difficult to get through that zone because we're still in a bear market.
Tone?
Yeah, no, I guess some viewers should be very happy because they under the impression that Tyler and I have never disagreed on anything. But we clearly disagree on this $4,000 to $4,200 area because I believe that even in a bear market, it's starting to get that, like, if we fall from here, right? Like if Tyler is right again on the $4,200 rejection for the third time, because you've already called the $4,200 rejection twice very accurately. And I continue to say that we're likely to break above it. And we can both be right next week, or we might have already been right considering how Bitcoin is dropping today. So did Bitcoin once again get rejected from this $4,000 to $4,200 zone? If it did, and we drop down to 3,700 and then come back to the $44,000 zone, now I will start drawing the ascending triangle. So once again, I don't know how many times we have to hit 4,200 to break it. But with every time we hit it, I believe we are more likely to break out. And I guess this is where Tyler starts to be a little bit the opposite of me, because eventually every bear market ends. And one of the best ways to be, I mean, it's not the best way to identify the end of a bear market, but it's the best way to get into a safe trade to the bullish side after the bear market is to identify an ascending triangle that is breaking out of resistance. And whether that resistance is 4,000, 3,000, 2,000, or 6,000, it doesn't really matter. I am looking for an ascending triangle to eventually end the bear market the way an ascending triangle ended in 2015-16 to kick off the big bull market. I wanted it to happen later this year at a lower price, but if it happens here, it happens here. Do I think that this will be the end of the bear market? Probably not, because even the breakout of this ascending triangle will still keep us under the $6,000 very critical resistance that has a chance to take us to new lows. But I am optimistic here that 4,200 is going to break.
Well, and Tone said a lot of very important things there. Number one is he and I often disagree on many things, but not on any of the big things. Not on the big conclusions to be drawn with the weight of the evidence. When we're talking about these kind of things, when I say 4,042 is overhead resistance, I'm not giving it more than a 75% probability of turning things down. When we were up at 6,000, because of all kinds of technical things that were going on, not only Hyperwave and Consensio, but the descending triangle, the gigantic descending triangle, and many other things, the stop and reverse points. My confidence that we were going to break down below 6,000 was 80% plus. So the scenarios that Tone just drew could very easily happen. All I'm talking about is the probabilities I see having to do with support and resistance areas being different in bull markets and bear markets. In bull markets, what tends to happen is overhead resistance, the number of times you hit on it, you finally break it to the upside. In down markets, the support that you get, even like at 6,000 with a number of hits, will tend to break down. But you can't reverse those things equally and say the same is true with support and resistance between bull and bear markets. There's and I don't know how big the difference is, but it's a probability difference of occurring. If we were above 4,000 and bouncing off of it here, then 5,000 and 6,000 are clearly, in my mind, reliable targets to the upside. But since we're below that level, trying to get through it, I continue to lean in the direction that the probability is that we will not be able to get through it. And, you know, most importantly, it doesn't matter. It doesn't matter because Bitcoin is still in a bear market. Now, what does matter is if what Tone is describing could be the launching pad of a new bull market, then it's a very important distinction. But as Tone just said, that's not what he is concluding at this point. But that's the only way you can get into a new bull market from where we are right here, is to take step by step. And then if everybody out there voting by buying or selling begins to increase their optimism that we can get up to 5,000, then blow through 6,000 at some point, then get up to 8,500 at some point, we're in a bull market, folks. And every other technical indicator will show that. The one that won't will be Hyperwave, because Hyperwave says we've got to go down to 1,000 and we haven't done it. I would love for this to be the one time that we don't see that happen. But as we sit here today, every one of my technical indicators are pointing to the fact we are smack in the middle of a bear market, mainly stop and reverse points, Consensio, as well as Hyperwave, and all this overhead resistance that I just drew in terms of these parallel zones. So anyway, that's great, Tom. Thanks for bringing us up to speed on that. And yeah, go ahead.
No,
Sorry.
you're working on that. What I was going to say was over the last couple of streams, I've been looking at this other metric of mining profitability.
Very interesting. I love it.
And if you get a chance, see if you can put that on a linear chart, because the numbers there are off the scale. See if you can put that on a linear chart on weekly, and there's no candles involved there. Maybe on weekly there might be candles, and see what Hyperwave says about that chart.
Great.
Because based on my analysis of prior highs and lows, that chart did bottom out. Now there's still a little bit more room to the downside from looking at prior history, but it does give you a slightly different perspective. And I've been finding that chart pretty interesting.
Yeah, I do too. Ever since somebody sent it to you, I think, or posted it, and you jumped all over it. And then I have listened to you on your last two broadcasts talk about it. I must say I don't really understand. I understand what its implications are. I just don't understand what the elements are that have gone into it and how accurate they are. And I heard you on your last one, not today's, but yesterday's, where you were going back and trying to analyze, did we actually get back to the prior peak or not? And kind of the way the scale was drawn or something. So I'll screw around with it and see if I can't come up with another way of showing it, because it is very interesting.
Was it Socrates? Put Socrates on.
Yeah, Socrates, that'd be great.
I bet he's here. Hold on one second. I will throw him on. So while I throw him on and send the link, do you guys just want to make a quick note, because it's still, I think, pretty much the only thing. I did ask you before, Tone, I really liked your answer. But to ride on the back of CBOE and the latest news, and what you were saying, that it really wasn't the best way to buy Bitcoins anyways, or to trade. Do you think that any of that news will affect the price at all? I already know your answer, but I would love if you guys talked about it a little bit more, since Bloomberg, at least, who I think they're getting it wrong, thinks that that'll push price down. Do you think that it's going to affect anything?
I mean, I think, if there is an effect, it's an effect to the upside in the price of Bitcoin, because it shows you like mental capitulation from companies that thought they knew better. It's no different than hedge fund managers that know better. And so if anything, it's admission that they don't know what they're doing. They got into something at the peak and they're getting out of something at the bottom, right? And if it's not the bottom, it's close to the bottom. So this should be the time when you are looking to create businesses and when you are looking to generate revenue off of Bitcoin, coming up with creative ways to launch something now in depths of the bear market, with potentially 6 more months of the bear market to go, maybe longer, and having that be successful, so that when the bull comes, you are right there capitalizing on it, and the kinks have already been worked out. So if I read anything into the CBOE closure, is that we're closer to a Bitcoin bull market than we were prior to them closing.
Ty, I have a bit of a different question for you on that. And Socrates, check your chat, which is that, the Wall Street Journal I was reading says, again, that this is the latest sign that mainstream financial firms are losing their enthusiasm for cryptos. Although, right, to be fair, CME Group still lists Bitcoin futures and has more volume than CBOE. Do you think that, one, do you think that that's true? Two, actually what the CBOE said is that it's reviewing its approach to cryptocurrency derivatives, and again, doesn't currently plan to list more contracts. Do you think that maybe there could be another structure even in the future that would work better and launch somewhere else? And two, do you think that's true that, which we do, but that, mainstream financial firms are just not getting as interested, even though we're on the back of the news with JP Morgan Chase and other big banks saying that they're more interested, but with their own coins, etc. Nuanced question.
Yeah. To me, it's very, very simple. None of the big financial companies need Bitcoin. And none of the big financial companies need a black eye from the crypto space. So they tiptoe into it and they talk about doing different things and they try launching different things. But until there is overwhelming evidence that this space is here to stay, and we are far, far from it because of all the CRAP that's going on with all these other programs. And these poor suckers in the big institutions never were able to differentiate between Bitcoin and all the other things. So they hired a bunch of people that talked to them about crypto and blockchains and new projects and stuff, and seemed exciting. And so on the way up from $0 to $20,000 and almost $1 trillion in assets after 10 years in the total market cap, that's pretty intriguing if you're in a big financial institution. But remember what all these people are doing. They're doing the same thing they did yesterday and last week and last month and the year before and 10 years before. They're making lots and lots of money with lots and lots of asset classes that they know huge amounts about and have hundreds and hundreds of people studying every day. So they get this little group together and they make some recommendations. They try it, they put a little money in it, and then it all, then they read the headlines about what's really going on in the crypto space. They hear what the SEC is saying. They see all the hacks. They see everybody losing money on these exchanges, exchanges shutting down left and right, changing the rules in the middle of everything. Put yourself in their position. And now a hedge fund is different. A hedge fund takes risks, and they will study things and they will put money into things, and sometimes they'll get caught, like ARK and Novogratz, because they didn't completely understand this new asset class, in my humble opinion. So anyway, that's a long way of saying don't hold your breath about big institutions doing anything to change anything about the ecosystem or the price until we clean out all of the garbage. And then that's the time for them to take it seriously.
So Socrates messaged that he needs 10 minutes. So if you don't mind, I'm going to ask you guys one more question to just buy the time really quickly. And that was, so I've stopped sleeping, which is why, well, actually I'd say that's why I'm wearing t-shirts, but I always have. And Tone did a vlog 2 days ago when you were still in Zurich at 3 a.m. my time, 2 a.m. And it was about GBTC. Well, you included GBTC. We have not talked about GBTC in a bit, Ty. And everybody always asks us about GBTC. So Tone, you don't have to, great, you pulled up the chart. Ty, if we could talk about GBTC really quickly. It is, always confusing, a bit crazy. And Tone, yes, we will take credit for converting you on GBTC. I would like to do that. If anyone wants to go back, Tone hated it. Now he loves it.
Well,
sure.
You have your chart up, by the way.
Yeah.
Ty?
Yeah. I like GBTC, number one, because I can put it in a retirement account, and I deal with a lot of people with retirement accounts, and I cannot do that without jumping through a lot of hoops in non-retirement accounts with Bitcoin. There are people that can do it, but it is very complicated. And if you don't have very good tax advice and legal advice, I would not have any crypto or Bitcoin in a retirement account. But there is no problem whatsoever with doing it with GBTC. So that's what attracted me to it. Number two, after studying the premium discount relationship, I loved it. I love the idea that the 2% cost of this particular security, which is high, but not all that high for some of the best mutual funds and ETFs, but mainly some of the best mutual funds have greater than a 2% management fee, but consistently outperform the indexes net those fees. When I look at the GBTC, the 2% cost of running that particular fund easily pays for itself relative to how easy it makes it to buy Bitcoin. Now, you must have trust that what they're telling you and what they're telling their auditors and what they're telling the SEC is all correct about for every Bitcoin that you think you're buying. By buying GBTC, there's actually a real Bitcoin being held in cold storage behind it. Not necessarily at the exact same time of the day that you make your purchase, but within a reasonable enough period of time that 100% is actually there and they aren't using any kind of fractional shares to differentiate it. The other number 3 is that this is regulated. And you've heard me discuss regulation versus decentralization and centralization. And I think that this ecosystem needs a certain amount of regulation until we clear out most of the other projects which do not respond well to regulation, and that's what will force them out. This one is regulated, and there are people looking and asking questions and looking for reports to be filled. And does that mean that nothing can go wrong? Absolutely not. But I just feel a lot more confident about it. And number 4 is I love things that trade at premiums and discounts as long as you understand what that means and how to play it. Tone is doing a great job of playing the premium side of this to be able to protect himself and make decisions, even though he finds himself on the wrong side of a trade for a period of time because he's so busy running around. There are ways using that premium, regardless of what Bitcoin does, to be able to take advantage of it. And you can take huge advantage of it at the right time in the right way. I'm just hoping it's still around and there aren't other ETFs that take its place before the next big bull market, because I would love to get a 300% kind of return on Bitcoin and a 400 and some percent return on GBTC, which is what is possible because of the way the premium acts.
Thanks, Ty. Tone, love the chart. What are you seeing?
I mean, I have nothing more to add. I mean, Tyler explained it absolutely beautifully. And this chart shows you just that. It shows you the Bitstamp price of Bitcoin in blue, the GBTC price in red, and the gray is the premium. And you know, with your cursor being to the right of both lines, you can see that the current premium is at 22%. Right now, GBTC is trading as we speak. So you're watching these percentages slightly wiggle around just a bit. And yeah, the percentage has been fairly steady in the low 20s, dropping down to the mid-teens every now and then. So even in the current environment, I mean, it's still tradable. You get a range on the percentage. So no, it's pretty neat. And I mean, it's grossly inefficient, but that allows professional traders like Tyler and myself to profit more from the inefficiency in the market. Now, as a as a responsible, YouTuber teaching people about trading in markets, I want maximum efficiency. As a trader looking to get rich, I want inefficiency. However, the inefficiency in the crypto space is, I wouldn't even call it inefficiency. I'd call it, unregulated space, and the inefficiency in the crypto space is not worth the risk of being hacked and having your money stolen. So there's a difference between inefficiency and incompetence, along with just the fact that there is regulatory risk and all this other stuff. So GBTC, it's good that we have it, and it'll create some very interesting discussions going forward.
All right. Well, thanks, Tone. I think we may have to end it. Socrates, I messaged you. We're doing another vlog at 4.
Yeah, maybe he can join us at 4.
Let's do that. That'll be traditional markets. Tone, thank you so much for jumping on. You have a beautiful apartment in the background, by the way. Did you tell everybody where you are, or is that a mystery?
I am in Mallorca, Spain. You've been here before, right?
I have not. Just Ibiza.
Oh, you haven't?
Other island.
Oh, wow. Oh,
Are
yeah,
you
I thought you have.
diving? Did you pearl dive yet?
Dive? I'm scared to go outside. I think it's going to snow. Like, it's unreasonably cold.
Wow, that's amazing.
Oh, no. All right. Well, Tone, again, thank you so much for jumping
in.
Thanks
a lot, Tone.
All right. Thanks, guys.
Okay.
All right. Bye, everybody.
Thanks, everybody.